All righty. Got 2:01 p.m. No folks will continue joining, but we're going to go ahead and get started. So good afternoon, everyone. Welcome to From Scramble to Strategy, a beginner's guide to audit readiness for local governments. I'm Bill Webb with CKH Group. Whether this is your first audit cycle or your 20th, our goal today is to take the stress out of audit season by building year-round habits. Think of this as your early year debrief, a chance to set yourself up before you head into the audit process, rather than scrambling after the fact. Before we jump in, I'm going to cover a few housekeeping items. There we go. If you have any questions at any point, please drop them in the Q&A panel so our team can follow up with you directly. For those of you earning CPE credit today, there are 4 things that are required. You need to attend for at least 50 minutes of the session. You need to answer all 3 engagement polls, which we'll prompt you for. You need to keep your cameras on throughout the duration of the presentation. And lastly, you will need to complete the follow-up course assessment form. That form is an assessment of the course itself. It's not a test of your knowledge, so nothing to stress about. If for any reason the polls don't work on your end, just submit your responses to us via email or drop them in the Q&A, and that will count as your proof of engagement. With that out of the way, let me introduce who you will be hearing from today. So a little bit about us at CKH Group. We're a CPA firm headquartered in Atlanta, Georgia, with a second office in Hawkinsville, Georgia. We've been in business for over 20 years, and in 2023, we made the strategic decision to specialize in government accounting. Since then, we've grown to serve over 60 government client locations across the Southeast, primarily in Georgia, South Carolina, and Florida, with more than 38,000 hours of government accounting under our belt. We're one of the fastest growing government accounting firms in the state of Georgia, and we're proud to be an Inside Public Accounting Top 400 firm, as well as a GSA contract holder pursuing federal government work. So again, my name is Bill Webb. I'm the Director of Business Development here at CKH Group. I have degrees in political science as well as an MBA, and I joined the firm in 2024 after retiring from the Army, where I served as a logistics officer. A couple of highlights from my Army journey included deployment to Afghanistan with the 10th Mountain Division. I was a company commander in the 3rd Infantry Division, and later directed the leadership development program at the University of North Georgia and Dahlonega, Georgia. After hanging up the uniform, I still had a calling to serve government in a different capacity, and that's exactly what we're able to do here at CKH. One fun fact, I'm the first person in my family to ever get the little puzzle table game at Cracker Barrel down to a single peg, so I've always got that going for me. I'm also joined today by Mrs. Jenelle Gordon. Jenelle?
Hey, hi everyone. My name is Jenelle Gordon, and I am the Government Operations Coordinator here at CKH. Up until about 5 months ago, I was a city clerk for a small city in Southeast Georgia. I am a Georgia Master Certified Clerk and a proud member of the Georgia Municipal Association. I've got over 20 years of executive office management. I've got my emotional support Diet Cokes queued up. And today I'm going to be sharing what I've learned from the auditor's perspective, and then also from the years of being on the other side of the desk. And I guess, the interesting thing about me. So I'm really awkward. That's first. And then I have a very impressive streak of crafting failures. It's a good record. Back to you, Bill.
Perfect. Thank you, Jenelle. All right, let's walk through what we're going to cover today. So we've structured today around 2 main learning objectives. First, we want you to walk away with the ability to develop and maintain a year-round audit preparation strategy. That means understanding why financial statement audits are required, and then what's at stake for your community if you're not ready, getting on the same page with some common accounting terms your auditor will use, and then identifying the monthly tasks and filing practices that keep your records audit ready throughout the fiscal year. Secondly, we want you to be able to navigate the annual audit process with confidence. We're going to walk through the 5 phases of an audit cycle with the approximate timeline for each, regardless of when your fiscal year ends. And then we'll break down what belongs on a PBC list, that's the prepared by client list, so that you can start assembling some of those documents before your auditor even asks for them. And then we're going to close with the 6 pillars of audit readiness to help you assess and strengthen where your organization stands today. So before we dive into the content, we're going to start with a quick temperature check just to see where everybody stands. So we want to get a sense of where you're starting from. And as a quick reminder, in order to receive your CPE credit, you must answer all 3 engagement polls. For any reason the poll doesn't load for you, please just answer in the Q&A option and send your response via email if that doesn't work. For anybody that has joined us late, please turn on your cameras if you intend on getting the full CPE credit. So our first question, how confident are you that you can easily find the records needed for your annual audit? You see your options ranging from very confident to not confident at all, or not any if you're not subject to an audit yourself. We'll give you a second to answer those. Let's see, most of you seem pretty confident. That's good. Great. Thank you for submitting those. It gives us a good baseline where we all stand. Now let's talk about why audit preparation matters in the first place. So my goal with this section is for you to care about preparing for the audit in advance. So being proactive, not reactive. A lot of what we're going to share comes from our perspective as the auditor. We see the same patterns and the same pain points across dozens of clients every year. And what we've identified is a real need for a better working relationship between the auditors and the entities that we serve. So the more you understand the process, the smoother it goes for everyone. So let's start at the beginning. What exactly is a government financial statement audit? At its core, a government's annual financial statement audit is an independent assessment of your financial records. Its purpose is to determine whether your financials are fairly presented in all material respects in accordance with GAAP, that's the generally accepted accounting principles, and whether you comply with laws and regulations that have a direct and material impact on those financial statements. Most states require local governments to conduct one annually, depending on thresholds like expenditures and population. For this example, in Georgia, an audit is required if your local government has a population exceeding 1,500 people, according to the latest census estimate, or expenditures in excess of $550,000 or more. If you fall below those thresholds, you may qualify for an agreed upon procedures engagement or a biennial audit, or no requirement at all, though you should still do one. Piece that affects your community directly to access state or federal grant funds. You must have a completed annual audit and meet any additional requirements that your state imposes. So in Georgia, that includes the GOMI survey and the report on local government finance, the RLGF. So requirements do vary by state, so make sure you check with your state auditor's office or whatever CPA firm you are engaged with if you're not sure. So now some of you may have heard of another term, and that is the single audit. So let's clear up what that is and how it differs from what we just discussed. So a single audit is not the same thing as a financial statement audit. It's an expansion of it. It's required by federal law for any non-federal entity, your city, your county, development authority, that expends a certain threshold of federal awards during the fiscal year. Now, I want to make sure that everyone understands this because there has been a significant change recently. The Office of Management and Budget revised the uniform guidance, that's 2 CFR Part 200, and raised the single audit threshold from $750,000 to $1 million for fiscal years beginning on or after October 1st, 2024. So this is federal law. It applies to all 50 states, every territory, tribal government. It doesn't matter if you're in Georgia, South Carolina, Florida, Alaska. If your entity expends more than $1 million or more in federal awards, you are subject to a single audit. So why does this matter? Some of your cities that are barely triggering the single audit under that threshold, that may apply to you now. So it could save your municipality real time and real money with fewer audit hours, lower fees, and less documentation burden. So if you haven't already done so, please talk to your auditor about whether this change affects you. Before we go any further, I want to make sure that we're all on the same page with some common terminology. So while working with the clients, we found a few terms that regularly cause some confusion, so we're going to clear some of those up. Confirmations. This is one of the most commonly misunderstood terms. When your auditor asks for confirmations, we're not asking for your approval of something. We're asking to contact an outside source to verify what you've already told us. So your bank confirms that you have 10 accounts with certain balances. That's third-party verification. So it's external validation, not your permission. Bank statements. This can trip some people up. When your auditor says bank statements, we mean all financial institution statements. So whether that's checking, savings, CDs, money markets, credit card accounts, any financial account your entity holds, including accounts with zero balance or no activity. Don't skip those. We still need to see them. The general ledger, or the GL, this is your central record keeping system, your chart of accounts with every single transaction that's occurred underneath each account code. If your auditor asks for this, it's typically a straightforward export from your accounting software. It's nothing fancy. Bank reconciliations, or recons. We're not doing a reconnaissance like a war movie or anything. This is basically balancing your checkbook, making sure that what your bank says matches what your books say. An important note, even if an account has zero activity, you still need to reconcile it every month. And when you submit your recons, make sure it includes any outstanding checks or deposits. Journal entries. These are entries into your accounting books. It's not a diary. It's not meeting minutes or anything else. If you're a smaller municipality using something like QuickBooks, the system creates automatic journal entries on the back end when you cut a check and assign it a general ledger code. So manual journal entries are when you write one check and manually allocate it across multiple accounts, or make an adjusting entry. So if your auditor asks specifically for manual journal entries, they want to see anything that was deliberately entered by a person rather than auto-generated by the system. And then lastly, funds and accounts. You'll hear these terms used interchangeably, and for most practical purposes, they can be understood to mean the same thing. Each fund is essentially a self-balancing set of accounts with its own budget, revenues, and expenditures. Your general fund is the main operating fund, but you likely also have special revenue funds, capital project funds, enterprise funds for things like water or sanitation, each tracked separately. As you can see on the slide, we recommend that each separate fund, like SPLOST, grants, and so on, has its own separate bank account. That will avoid commingling, which we talked about, and it makes your life and the auditor's life significantly easier. Jenelle will talk more about this as we get further into the audit process. If there's any other terms that come up during today's session that you're unsure about, feel free to drop them in the Q&A or send us an email. We'd be happy to address them with you. So let's talk about why all of this actually matters to you and your community. So why should you care? The bottom line is your completed annual audit is the gateway to state and federal grant funding. Without it, those dollars will not flow to your community. It avoids project freezes and delays. When an audit isn't completed on time, projects stall, water system upgrades get paused. The community really feels it. So it protects public funds and it builds trust with your citizens. You're demonstrating responsible stewardship of taxpayer money. And it serves as an early warning system, detects errors or potential misuse before they become formal findings that end up in your audit report. Look, we get it. The audit process can feel tedious, uncomfortable, or overwhelming. But consider the alternative. When projects stall or infrastructure goes unfixed because of audit issues, that's where finger pointing and community breakdown starts. And that's what we like to call the street committee. And you don't get a vote on what the street says about you. So it's better to take control of it, own the messaging, and show your community that their money is in good hands. At the end of the day, audits equal trust. So we know why audits matter. Now let's take a look at the mindset that makes audit readiness sustainable. So audit readiness truly is a year-long preparation and organization exercise. It's not something that you can cram for effectively 2 weeks before the auditor shows up. In the Army, we call this sustained readiness. So constantly working on being prepared for whatever task or mission is coming up. So when the call comes, you are actually ready. In this case, the mission is the audit, and it comes every single year, so it shouldn't be a surprise. The same principle applies here. Your bank reconciliations, your payroll reports, your meeting minutes, these aren't things you gather at the end of the year. These are things you maintain all year long so that when the auditor calls, you're already ready. So what does sustained readiness actually look like in practice? We're going to start looking at organization. The better you organize and prepare for an audit, the easier it is, and the more money you will save. Another way to think about it is like brushing your teeth. Small habits daily prevent bigger, more expensive problems down the road. And if any of you are veterans like me, you may have heard the age-old aphorism, if you fail to prepare, you're preparing to fail. That's what we want to avoid. So here are some practical tips. First, have an actual knowledge management plan for how you sort, file, collect, and share information. A good filing system means you never have to scramble to scan items, call vendors, or dig through old emails when your auditor asks for something. Second, post documents on your public website, meeting minutes, adopted budgets, ordinances. If they're already publicly available and up to date, your auditor can access them without you spending time tracking them down or sending them over. Third, digitize your records. Many of our clients are still heavily paper-based, which significantly increases the time and cost to become audit ready. So scanning documents as they come in eliminates that crunch later on. Fourth, use separate bank accounts to avoid commingling of funds. When funds are commingled in a single account, it creates complicated due tos, due froms, and journal entries that make both your life and the auditor's life more difficult. And a practical note, if your records aren't currently organized, that's okay. You can always bring in support to get caught up. A lot of government entities sometimes create specific engagements for accounting support to clean up filing systems and establish a structure. It's like an investment, but the long-term benefit to your audit readiness is significant. So organization is the foundation. Now we're going to talk about some specific monthly tasks that keep you audit ready throughout the year. So here's 10 tasks you should be completing on a monthly basis. These are not anything extra, but they are the building blocks of audit readiness. So bank reconciliations, at a minimum, they should be done every month as part of your month-end close. Reconcile every account, even ones with zero activity. Failure to do so is actually an audit finding. Payroll reports. Process and file your payroll reports monthly. This ensures your payroll liabilities, withholdings, and benefits are accurately captured and current. Meeting minutes and ordinances. Upload and organize your council or commission meeting minutes. These are evidence of governing body approvals, budget amendments, contracts, policy changes, all of which your auditor will need. Invoices and accounts payable. Keep your AP current. Process invoices timely and maintain a clean aging report so you know what's outstanding. Revenue reports. If you operate proprietary funds like water department, trash collection, sanitation, you need monthly revenue reports for those operations. Same applies for your tax digest and other revenue streams. Balanced interfund accounts. If you're transferring money between funds, say from your general fund to a capital projects fund, those transfers need to balance on both sides every month. So in this example, if Fund A shows it sent 50K to Fund B, then Fund B needs to show that it received that 50K. Unreconciled interfund balances are one of the most common issues that we see, and they create significant cleanup at year end. Grant tracking and documentation. If you have active grants, make sure that you're tracking those expenditures against grant budgets monthly. So documenting draws, match requirements, and compliance milestones as they happen. Don't do it retroactively. This is especially critical if your grants push you into the single audit territory, as we discussed earlier. Fixed asset and activity tracking. Track any additions to or disposals or transfers of capital assets like vehicles, equipment, buildings, infrastructure. If you bought a new truck or retired a police vehicle or completed a construction project, make sure you record it when it happens. Your auditor needs a current fixed asset register at year end, and building it monthly is far easier than reconstructing it all at once. Debt and lease monitoring. If you have outstanding bonds, notes, loans, or lease agreements, make sure you're monitoring the amortization schedules monthly. So track the principal and interest payments as they are made, and then flag any new debt instruments or modifications. With GASB 87 lease requirements, even copier or vehicle leases may need to be recorded. So just make sure you keep those agreements current. And then lastly, the budget to actual analysis. Compare what you've actually spent against what you've budgeted monthly. If you budgeted 100K for a department and you've spent 30K through March, you've used 30% of that budget. So staying on top of this is critical because overspending your budget can actually be an audit finding. It also gives your government body the information that they need to make course corrections mid-year. Now, a simple habit that ties this all together, we call this the one for you and one for me method. So as you save any document on your computer, create a copy in a standard folder designated for your auditor. Build your audit file as you go. Those few seconds you take to file incrementally will save you hours and possibly days when audit season arrives. This may sound like a lot, but if you do it incrementally over time, it becomes part of your routine and you won't even have to think twice about it. So now that we've talked about those monthly tasks, let's talk about what good file management actually looks like, because having the documents is only half the battle if you cannot find them. So this is an example of a file tree to give you some inspiration and what stands out as important from the auditor's perspective. Before getting into specifics, I want to share a little anecdote and wisdom from a man I used to work for named Gene. He is a general contractor I used to work for, and the only man I know that's been struck by lightning twice and lived to tell the tale. So Gene used to say, if you always put it where it always goes, it will always be where you always need it. That's file management in a nutshell. So everything we're about to walk through is just a system for making that happen. Organized by year and month. While it may seem logical to put all bank reconciliations in one big folder, you'll end up digging through years of files to find the one your auditor is asking for. So use a top-down approach, year, then month, then category, then that specific document. That way, anybody, you, your successor, your auditor, can navigate to exactly what they need. Be consistent with naming conventions. Say you've got 10 different bank accounts with Bank of America, each used for a different purpose. So SPLOST, grants, general operating fund. It would be confusing if your files were all named Bank of America, B of A, or just bank. Instead, use a consistent format, which includes the month, year, and then a defining feature. So look at the last column here in the example. It's clean, clear, and findable. When in doubt, don't delete, especially if you're dealing with historical documents that existed before your arrival, perhaps. If it's a mess and you don't know where it belongs, at a minimum, we recommend moving it to a separate archive folder for later reference. That way, it's far better to have a document that you don't need than to need a document you deleted. Have backups and contingencies. Don't keep all your eggs in one basket. So if your entire filing system lives on one computer's hard drive and that computer crashes or disappears, so do all of your files. So we recommend using cloud storage, shared drives, or regular backup procedures so your records are protected. There's a great chapter from a book written by a man named Pete Blaber, who's a former Delta Force commander, in his book, The Mission, the Men and Me, that says, if it's not shared, it's not reality. That's the goal in being organized. Create shared understanding so that the information isn't trapped in one person's head or in one individual's machine. So the old adage, 2 is 1, 1 is none, is true. And then finally, don't let perfect be the enemy of good. As Voltaire once said, the best is the enemy of the good. So if you're waiting until you have the perfect filing system before you start organizing, you're never going to start. A system of organization is better than no system at all. So even if all you do is dump your documents into folders organized by month or year, that's dramatically better than having files spread across multiple platforms or sitting as hard copies on your desk or in a closet or not existing at all. So if you'd like a zip file of this example file tree structure, you're welcome to reach out to our team after this presentation and we'd be happy to send it to you. So we've covered why audits matter, how to stay better organized, and the monthly tasks that will keep you ready. But before I hand things over to Jenelle and walk through the audit process, I want to address something that I know some of you may be thinking, and that's filing an extension. So what happens if you're not ready? What if, despite your best efforts, you can't get it all together in time? The good news is there's a safety net. So if you are prepared by your audit deadline, most states allow you to file an extension. Obviously, it's not ideal, but it's a far better than going dark and missing your deadline with no communication at all. One important caveat, the extension process is not a one-size-fits-all process. Whether you can file one, how you file it and who approves it, and how long you get all depends on what type of municipality you are and what state that you are in. So a city may have a different process than a county or a special district. What works in Georgia may not apply in South Carolina, Florida, Tennessee. So don't assume that because your neighbor got an extension that the same rules may apply to you. In Georgia, for example, cities can submit a written request, and that's something as simple as an email to the DOA and receive an additional 180 days to submit their audit. But a county may have different oversight requirements, and across the state line, the process could be entirely different. So make sure you understand the specifics to your entity, know your state's rules, and then know who your oversight agency is. And if you're not sure, make sure you ask your auditor. Now, if you file an extension, do you lose access to those grant funds? No. Filing an extension keeps you in good standing, so your funding doesn't get frozen just because you ask for more time. That said, an extension is a tool, not a strategy. If you're filing them year after year, your preparedness process definitely needs some work. But if you're in a tough spot this year, maybe you have new staff or staff turnover, you're catching up from prior years, file it, get it done right, and use this as your reset year. So when things don't go perfectly, there are options. The key is communication with your auditor, with your oversight agency, and then with your governing body. An extension buys you time, but the goal of everything that we've covered today thus far is to get you in a place where you don't need an extension. So now we're going to walk through what the audit process actually looks like step by step, and I'm going to hand it over to Jenelle.
Thanks, Bill. You guys are going to think I'm a little bit crazy, but the audit process, is it like Fight Club because nobody talks about it? And I went into my first audit completely blind, and it really made me wonder how many staff members and clerks and elected officials also feel like they're blind to the process. So in this segment of the presentation, we're going to cover what documents your auditor is going to need, the 5 phases of an audit, and we're going to wrap up with what we call the 6 pillars of audit readiness. So when you're in the dentist chair, they warn you before they give you a little poke. They don't just stab you, you get a warning. So we're going to go through this audit process together so that there won't be any surprise pokes. And we're going to start with the PBC list. Now, your auditor is going to send you a list of reports, policies, and documents that they need before they can start the audit. It's called a PBC list, and it's that prepared by client list. As you can see here, there's a lot of documents that your auditor is going to need, but let's simplify it. Here's the too long, didn't read version. So there's basically 4 different types of documents. You got your standard documents, and those are the ones that that are in a filing cabinet somewhere, all dusty. And these are your historical documents, like old IGAs that are still in effect, or grant documents from 10 years ago. And like Bill said, this stuff could have been before your tenure as well. The next type of documents are what's new to the fiscal year. And these can be new IGAs, your new adopted budget, lease agreements, loans, grant awards, newer updated policies, and side squirrel. A lot of these new to the fiscal year documents, they're going to end up shifted on over to your standard documents after the year's end. And then we've got the monthly items, and those are all the things that Bill talked about that impacts your audit readiness. And so those are your bank recons, your payroll reports, your meeting minutes, stuff like that. And then you have your year-end reports, and those are the ones, those are the reports or data that can't be sent until the books are closed. So like if you have a June 30 fiscal year end, it's going to be July before you get the bank statements for June. So these first 2 sets of documents, the standard documents and the ones that are new to the fiscal year, those can be sent before your fiscal year ends. And the last 2, you want to aim to have those done about a month or so after your fiscal year does end. Now that you got kind of an overview of what your auditor will need from you, let's go ahead and talk about some PBC best practices. We know that this list can be overwhelming, especially if it's your first time seeing this huge long list that your auditor has sent to you. And you might not understand everything on that list. And so that's why we've got a few best practices to help ease some of that stress. First of all, communicate with your auditor. Not every line of that PBC list will even apply to your entity. But if you meet with your auditor and have them walk you through the list, you'll be able to determine which one of the items you actually need to provide. We are working together. Both of us, we want to get to that same place. We want to get across the finish line. And 2, don't wait for the PBC list to start preparing your documents. These lists are pretty standard and they really don't change year after year. So you can work from a previous list. And also some banks limit the number of statements that they provide online. I've seen some banks only go back 12 months. So regular downloading of all of your bank statements is the way to go. And a really great practice is just to close everything out at the end of each month. If you close out monthly, you can start the new month fresh and you're not backlogged, because trying to catch up will take all that you can muster. That was pretty dorky. Lastly, your auditor is going to, they're likely going to request these items via a secure portal. And that's why digitizing your documents is so important. I think one thing that we didn't realize is how much COVID changed things. The idea of having your groceries delivered was some kind of Beverly Hills stuff. We had to learn how to broadcast meetings, and I need to confess, I'm not a pro with this tech stuff. I struggled logging into Teams. So give yourself some grace. And this is a big change for some, especially with your auditor. For a long time, your auditor came on site, grabbed the files, and set up shop in a conference room for a couple of weeks, making copies and asking some clarifying questions. But now so much of the bulk of audit work is done virtually, and that means digital files. So documents, if they're not digital, they'll have to be scanned, and that has to be done either by you or the auditor will need extra time on site to scan what they need, and that can increase costs and extend the timelines. So now that we've talked about the PVCs, because it is a really critical, English is hard, critical pivot point in the process, but we haven't looked at the phases yet. And it seems I got the wagon before the horse or the cart. Bless it. Let's take a look at the 5 phases of the audit process now, shall we? All righty. Knowing each phase is going to help you understand when and why your auditor is asking for things in a certain way. Your audit has 5 phases. We've got phase 1, which is your audit planning and engagement setup. Phase 2 is your PBC completion. Phase 3 is your internal control evaluation. Phase 4 is your audit fieldwork and reporting, and phase 5 is your governance, presentation, and regulatory filing. Now, phases 1 and 2 are pre-audit, so that stuff happens before your audit actually starts. And phases 3 through 5 are in the actual audit stage. Now, I don't know about you, but I'm a visual person, so reading this does not help me understand the process at all. I need some graphics. But first, we interrupt the broadcast for a mandatory poll. I just want to give you a little reminder here that you need to submit your answers there to the poll in order to receive your CPE credit. So which phase of the audit do you think takes the longest? Let's see. All righty. Phase 4, the audit field work. Oh, you guys are good. Oh, right on. Yes, in an ideal world, if you have consistent end of month closeout process, phase 4 should take the longest, but sometimes for a variety of reasons, that PBC list can take significantly longer if you're not quite ready for the audit yet, or you're still trying to complete or collect the documents that have been requested, and that's on top of your everyday workload. If one phase gets delayed, it can really put pressure on the other audit phases. And finally, we've got a graphic. We've broken down the 5 audit phases. And this is kind of a timeline, and it's broken up into 2 groups, your pre-audit, which is like your warm-up, and then the actual audit, which is the race to the finish line. Now, as a disclaimer, your timeline might vary based on your audit deadline. We base this around Georgia's 6-month deadline after the fiscal year end, but the deadlines do vary from state to state. So Georgia is 6 months, South Carolina 13, and Tennessee and Florida at 9 months. So you may have more time to complete it, but that doesn't mean that you want to wait to start. And please don't focus too much on the timeline, really focus on the phases. Now, nationwide, about 75% of cities have a population under 5,000. But if you're a larger entity than that, you'll need to conduct an interim audit and testing during the fiscal year, just because of the sheer volume of the data that has to be reviewed. So for an example, an interim audit may do 70% of the work throughout the fiscal year, so your timeline may be different than what's displayed. So taking a high-level look at this timeline, we're going to break down each of the phases in the next slides. But phase 1 is where you're going to meet with your auditor and get your PBC list. Phase 2, you're working on those PBCs. That's the pre-audit portion. And then there's 3 stages of the active audit. But I need you to remember that your audit cannot start until phase 2 is complete. And you're competing with everybody else in your state that has the same fiscal year end to race through the pre-audit and get into that active audit stage. So think of this like lunchtime at the only cafe in town. They've got limited seating. Everybody is hungry and everybody has to be back to work at 1 o'clock. The earlier that you get there, you beat the rush, you get your food faster, and you're not stressed about getting back to work on time. But if you wait just a bit, you're in the thick of the rush and you're waiting in line. You're going to eat, but your server is going to be hustling. But those that got there a little later and are at the back of the line, still waiting to get seated, well, now they have to make a choice. So do you skip lunch, which is like the equivalent of disrupting, just the normal operations at City Hall or your board commissioner's offices to attack that PVC list? Or do you get back to work late? And that's might be filing an extension. And as we mentioned during the poll, if one of these phases gets delayed, it really can put a lot of pressure on the rest of the audit phases. So let's get into these phases and delve into what occurs in each of them. All right, here we go. Phase 1 is in the pre-audit. This phase typically would happen 6 weeks before your fiscal year end. And if you're working for a new auditor that year, they're going to want to meet with you early to sign the engagement letter and confirm their timelines, the fees, the scope. And this is where you'll share all of those changes that were unique to the fiscal year with your auditor. So did you have new grant awards? Did you buy or sell some big ticket items? Do you have new contracts or policy updates? Did you have a change in the services that you provide, like privatizing sanitation? Did you have really key staffing changes, like somebody retired, somebody got promoted, you have a new county administrator or city manager, maybe you have a new clerk or a new finance director? And here in the southeastern US, you guys know we have some severe weather events. So if your entity has experienced one, please let your auditor know. We also, though, need to know if you or the person that's handling something is behind on tasks. So some very common ones that we're seeing is meeting minutes and those recons, just because everybody's wearing so many hats and there's skeleton crews. There's no extra people hanging around. So we're just doing all we can to try to stay up to date. The information, this is how your auditor is going to customize your PVC list. And this is the phase where your auditor is going to create that secure portal for you. And you want to start uploading those documents as soon as that portal opens up. So you can start uploading the standard documents, those ones that are in that dusty filing cabinet, and the fiscal year documents that we just talked about right away. This is also the time for you to share with your auditor the best times to contact you and the best times, and don't contact me during these times. So what days and times are best? Is it on Wednesday afternoons? Do you prefer for us to check in by phone or do you prefer email? Are you taking leave or vacation for an extended time? Are you unavailable the 2 days before a council meeting? Or maybe you're going to be unavailable in the 3rd week of August because of election qualifying. But please let us know, because we want there to be minimal disruptions to your municipal operations, and we want to be respectful of your busy times. So now that we know what to expect in phase 1, let's keep going and see what phase 2 has to offer. All right, we are here at phase 2, and this is your PVC completion. And the goal is to have this step completed about a month or so after your fiscal year end. This is when you can close out your books and consolidate all of your monthly and year-end docs for your PVC list. We've talked about how important this is, and I don't want to beat a dead horse, but your auditor cannot begin the audit until this phase has been completed. And that's why we emphasize the importance of good habits and good organizational habits, because it's not just best practice. It can affect how long your audit takes and sometimes how much it costs. Because the more time that your auditor is spending outside of their scope chasing information or calling vendors or scanning documents, the more it may cost you. The great thing, though, is that while you're submitting these documents, we're going to be sending you updates on your progress through this step. So you're going to get that email that says, "Yay, your PVCs are 35% complete," and we're going to be there to help you if you've hit a snag. And if there is something on that list that you're not quite sure what it is, let us know or let me know and I'll translate it. The one item, though, that is on every single PVC list is bank statements and their recons. And for context, let me give you a little example and do a little quick math. So if you have 10 financial accounts, those accounts could be your general fund, your hotel occupancy tax fund, your water and sewer, SPLOS, T-SPLOS, LMIG, LRA, impact fees, ARPA, credit card accounts, all of those. Say that you have 10 of them and there's 12 statements. there's 12 months, that's 120 statements that you need to save, but it's also 120 reconciliations. So that's 240 documents to electronically file and upload. And so it's important for the staff and for the elected officials to know that a line item on the PVC list may have just one report, like one, it could be one that could be really easily downloaded from your accounting software, or it could be 240 documents, like the example I just gave. In my experience, though, one of the hardest things to get are those bank confirmations. You know, when Bill was telling you about how they're gonna, it's verification from the bank, like of how many bank accounts you have, and the attorney confirmations. I don't know why, but these two seem to be the toughest to get. If you're feeling like this whole phase is tough, it's okay, because we're going to give you tools before all of this is done so that it's less painful next year. And so, as you can see from the graph up here, we're in phase 2 in the blue. And so this is where we finish stretching, and the audit is going to be starting in 3, 2, 1. It's go time, y'all. All right, phase 3 is your internal controls evaluation, and this is going to take about a week or 2, depending on how large your entity is. At this phase, your auditor is probably going to be on site and will interview you, if you will, about your processes, and those can be written and unwritten. Now, I'm not going to sugarcoat things here. This interview has often been compared to being interrogated, but it's actually not the case. I do want to reassure you that the questions that you're being asked are asked of everyone. They aren't a reflection on you or your organization. It's a legal requirement for us to complete the audit. What your auditor is doing, though, in this phase is they're building a plan for their field work. They're trying to understand the complexity of your specific situation and where they need to spend more time, if they need to collect more audit samples or get confirmations on certain items. But this is why the questionnaire is the bee's knees. Much of your financials and the documents, they provide proof that you're in control, that you of your internal controls, and proof is what you need in order to combat the street committee's reporting. So if you report that the policy is that the clerk prepares the check, but 2 elected officials have to sign it, well, your auditor can look at your bank statement at the checks and see that, yes, 2 elected officials did sign all of the checks. And that provides proof that your entity is following your internal controls. Another example would be if the process is that any purchase over $1,000 has to go before the governing body, and there's a purchase over that amount, and then the minutes show that it was approved by the body, boom. That's proof that your entity is following your internal controls. And please know that we're not trying to bust anyone. If there's something that's not best practices, it's okay. We're going to give you the information you need to correct it later. And as a side note, though, if you're conducting an interim audit, there may be a different process, or this step might occur much earlier. But now that we know, the auditor and you, now that we have completed this phase, we are getting ready to move on to phase 4. We are almost at 5. Phase 4, that's your audit fieldwork and reporting. And during this time, the audit team may come on site, especially if your documents need scanning. And during this phase, they're going to review the PVC items that you submitted. They're going to select audit samples, and they're going to reach out if they have any additional requests or if they need more clarification. So sampling is like a farmer who has an apple orchard. The sampling is like the farmer going and he gets an apple from the front, the back, the left side, the right side, some random row. And if they all look about the same size and health, then he can pretty much deduce that the entire orchard probably it's producing the same quality of apple. Your auditor doesn't go row by row and tree by tree, they sample. And the number of samples really just depends on how big your orchard is. So for each one of those samples, they're looking for the backup or the justification. So that could be meeting minutes, that could be an email, an invoice, or any other type of backup for the transaction. They may ask follow-up questions too, to fully round out certain items, just making sure that the picture is complete and there's nothing left unfinished. It's kind of like when clerks prepare meeting minutes. We want the record to be as complete and accurate as possible. So please respond quickly to any queries that they have to keep the audit process moving along, especially if this phase has already been delayed due to other phases taking longer. After all the field work has been completed by your auditor, they'll draft the financial statements and issue their audit opinion. Go ahead and take your victory lap, because woo-hoo, you have completed your audit. This is the final phase. All right, this is the governance presentation and regulatory filing phase. And this will happen typically 30 days before your audit deadline. And this is where you can really pat yourself on the back for getting that audit completed. During this final step, your auditors will present their audit to the governing body. And during the presentation, your auditor is going to report on the health of your entity, what things y'all did well, and also some things that need some attention, a little bit of attention. And those are called findings. And this is the part where your auditor is going to give you the tools that you need for a successful next year. I'm going to give you an example of something that may or may not have happened to me. A lot of times we do things the way that they've always been done. So maybe somebody was depositing SPLOST into the general fund because that's where the previous clerk had deposited it for years and it was fine. And then maybe the city's auditor retired and the new firm saw the deposits. And during their presentation, they made the council aware of their findings. So it was fine. The city separated the funds and everything was fine. Nobody was arrested. Your audit findings, though, are really just improvement areas. You don't know what you don't know. I mean, allegedly, I didn't know this is for educational purposes only. CKH Group especially likes to take time to give tips and advice, not just on the findings, but on the audit process itself to make next year's audit even smoother. Because if you establish a strong process during your audit, like a good filing system or clear policies, keep that going forward. And our goal is always to improve this process year over year. So right now you might be thinking, but Jenelle, how long should the audit take? Ballpark. Well, that depends. So when I say the audit, we're talking about from when you sign the engagement letter to completion. So that's phases 3 through 5. Your engagement letter will have a date on there that the audit team would like to be in phase 3 with you at. This is where the audit readiness truly plays its part. So if we refer back to our phases, we know that 3 to 5 are our actual audit. And how long it takes really depends on how prepared you are and how organized you are as a whole. And that can, if you're organized, it can dramatically reduce how long the audit process takes. So here's some examples of how long the audit could take, depending on how prepared you are. In our first example here, we've got our best case scenario. You're highly prepared, PBC list ready to go. Everything has been provided every step of the way, and your filing system is just beautiful. You know that your documents, you know exactly where your documents are, and you know how to find them. And for these, the actual audit can take as little as 4 weeks. But as we said a little bit earlier, don't let perfection be the enemy of good. More realistically, an average entity is going to look more like the middle section here. Hold on. Get some little bit Diet Coke. Perhaps you got like your filing system in place and you got somebody who's experienced and has been handling audits for a little bit, and they know where to find things, but there's still some hiccups along the way, especially if certain things are hard to find. Bill, was it Gene that said put it where it's supposed to go and you can find it or something?
Yeah, if you always put it where it always goes, it'll always be where you always need it.
Yep, that was it. And the last one is for an unprepared entity. That could mean that the books they're not complete. You've got a backlog of monthly tasks. Maybe most of your paperwork is physical hard copies, and it's going to take some time in order to scan all those and get it and get to the point where you can hit phase 3. And this is why investing in organization is an investment in your community, because if you're highly prepared, your audit can be shorter, it can cost less, and it can save you time and effort. Now, I want you to think about your municipality and ask yourself, what is your biggest challenge to completing submission of the full PBC list? Is it that your documents aren't digitized? You can't find the documents? You're not understanding what's being asked? Are you having difficulty collecting the documents? And, you know, are you just behind? Are you just behind? I know that feeling. I know that feeling. It does take time and tweaks to be more audit ready. It's not something that can be done overnight, but small adjustments like saving your recons to a folder on your desktop can save a lot of time in the future. My personal goal is to try to only touch a piece of paper once. So now that we've got a little bit of a better understanding of the whole process, let's zoom out and see how all of these pillars hold up and just show overall audit readiness. You know, it's going to be these things that you're seeing here, having those documents organized, monthly reconciliations, timely year-end close, making sure that your internal controls are tight, modernizing and maintaining your accounting system, and then just fostering a culture of just being audit ready. I don't want you, though, to focus on the improvements that need to get made, because you guys need to give yourself a pat on the back. Have some grace here. Give yourself some grace. It's not an easy process. Nobody does it. Nobody goes into it thinking this is going to be so much fun. But it's all right. It's all right. There's this one, a quote, I think, though, that kind of sums up our time together learning about the audit process. And this is courtesy of our greatest American hero, G.I. Joe. Now you know, and knowing is half the battle. And man, I'm a dork. Take us home, Bill.
Thanks, Jenelle. All right. So big takeaways from today. Audit preparation is critical to easy, seamless annual audits, which are required to access certain funding, and simply a good thing to do as stewards of taxpayer money. Second, proper preparation means staying organized and keeping up with monthly tasks year-round. It's not a sprint you should dread once a year. It's sustained readiness. And a little bit every month compounds into a smooth audit season. Third, understanding the 5 phases of the audit helps you know what's expected of you at each step throughout that process. So when you can see how the pieces fit together, the whole process becomes less intimidating and a little bit more manageable. And then fourth, knowing what belongs on a PBC list means that you can have those items ready before your auditor even asks for them. And that's the difference between scramble and strategy. So remember, audit readiness is a journey, it is not the destination. So every small step that you take this month makes next audit season that much easier. So I know we're at the end of our time here. Before we wrap up the session today, we're going to share a couple upcoming events where you can connect with our team. So here's 2 events that we have coming up where you can meet with us in person. The first, the Association of County Commissioners of Georgia annual conference at the end of April, and then the Government Finance Officers Association of South Carolina, they're in early May. Lastly, just want to provide you some ways to stay in touch with us. If you'd like to receive a copy of a sample generic PBC list, or maybe a copy of the file tree example that we reviewed, send us an email. We'd be happy to share it with you. Remember, this is a quarterly CPE training opportunity, and we'd love your feedback. So the course assessment form goes to real people on our team, doesn't go to a robot, and your input is taken into consideration as we plan the next session. So with that, thank you all for your time today. Don't forget to complete the course assessment form for your CPE credit. And remember, stay ready. Thank you.